Finance advice since 1993. It's time for Your Money with Steve Rosenberg, Sherri Goss, Randy Goss, and Becca Wilton. To participate in today's program, call 478-742-0940 with your financial questions and comments. And now, live from the Macon studios of News Talk 940 WMAC, it's Your Money.
Good morning, Middle Georgia. Becca Wilton and Sherri Goss are here to take your phone calls. 742-0940. That's 478-742-0940.
And if you don't want to hear yourself on the radio and you want to text, give me a text at 478-955-8284. That's Becca. And I had 3 or 4 people text last week with questions, and some that we were able to cover on the radio and some that I followed up with during the week. So
she's much better at looking at her phone than I am. I don't look at my phone, so I shouldn't even give the number out. And if you want to email, you can email Becca to becca@rfmoney.com if you have a follow-up question about something that we talk about today, because sometimes people want the articles that we're reading from, or they want more information. We've got a couple of things in here that are really good today that you might be interested in getting the actual article. So anyway, so we'll get started here in a second. But first I want to kick off with, I had a really good meeting yesterday. This woman named Ann Beasley knew me from years and years ago when I used to be on a coalition, healthcare coalition in Macon. I used to go to the monthly meetings, and I knew all of the people that ran all the facilities, people from Navicent, people from Coliseum, and because I wanted to know who's who in town. And I participated in it for about 5 years, and I just have not been able to go in the past few years because I'm just too busy. But she reached out to me because she's now the executive director of a new development called Watercrest Senior Living. And they call it the cruise ship that never leaves the port.
It's kind of a good thing.
It's for real. I mean, this thing is unbelievable. It's the most beautiful senior living facility I have ever seen in my life. It is off Bass Road, right across from all the shops, right to the left of Natalia's. I met the chef. The chef went on the tour with us. And they have all sorts of socially engaging things that they're going to do with everyone who lives there. And I really like the concept of that, because I have people who are retired who stay in their room all day. They stay in their apartment all day. They stay in their house all day. They don't meet other people. They don't have anything to do. They watch. Do you know that the average retiree watches 42 hours of television a week?
That's like a full-time job of TV.
That's in the Ken Dykewald book. They've done the study of this. It's not healthy. It's not mentally healthy. If you don't have an outlet, if you don't have family, if you don't have grandkids, if you don't have a hobby, if you don't have something, and you're just sitting in 4 walls all day long, I'm concerned about you.
It's not good for your mental health.
No. So anyways, I'm going to do a program on September 8th from 3 to 5. I'm going to do a 20-minute program. Then they'll do a presentation of the place, and they're going to have wine and charcuterie boards that the chef is going to create. And so Steve and Nancy, Randy and I are all going to be there, and we're going to invite some clients that we think might be interested in. But if you're interested, call Mandy Walker. She is the salesperson. Her real title is Community Relations Director. But anyways, her office number is 478-250-9154. And if you need the information and you didn't write it down because you don't have a pen and you're eating your breakfast, just text Becca and we'll text it right back to you. But September 8th from 3 to 5, you need to sign up. Don't just show up. They want to know how many people are there. And it's for people that are interested in a senior living community. And I'll get into more detail later about it. But I just want to kind of give people a heads up in case they were interested in it. But I'm very excited about having something like this in our community. We don't have anything like it.
Yeah, it sounds a lot nicer. Just different varieties of offerings for the
gym,
assisted living.
Yoga classes, pool, garden. I mean, they've covered the bases of what people would want to be engaged in, and lots of activities plans, arts, painting, ceramics. I mean, the whole nine.
You mentioned the cruise ship thing, and I have actually heard of people living on a cruise ship. Like once they retire, they sell everything.
Yeah, I've heard of that too. It sounds like a nightmare.
You have to get off like every week or every other week, and
your room is tiny.
Yeah, but
wear the same thing every week, I guess.
Yeah, I mean, you have like maybe 5 outfits, and you have them do your laundry for you, and you get all your meals provided for you. There's activities, so it's kind of the same, I guess, in a way. You actually get to go places on the ship.
And get off and look around.
But then you have to move rooms, whereas the assisted living, you get to actually stay in the same room. That make it easier.
Yeah. But it's independent living, assisted living, and memory care. It's all 3. So if you're interested, give her a call. text us if you didn't get the information. So we're going to start with a market update. You want to lead off on this?
Sure. The market had a great week this week as far as stocks, and they had record highs every day almost. The Dow hit a new record, and kind of followed the weekly jobless claims falling. So less people are actually making claims for unemployment, and the earnings just have been trending higher for all the companies as they release their reports, and so it's caused a lot of the tech companies to jump, and it was just a really good week on the market as far as the recovery goes.
It's so interesting. So for our managed portfolio, the sectors that we're predominantly in and have been since COVID are technology, healthcare, and consumer discretionary. Consumer discretionary is where people are spending money. And those, I really thought we would have rotated out of those more by now because we've been in them a long time, but it still is the place to be. We have moved into materials and industrials for infrastructure spending. So anyways, if you're ever interested in seeing our model portfolio, you just need to call the office at 922-8100 and come in and see what we're doing with our managed portfolio for our clients. And we have an eye toward risk management where we move out of the market when risk is high and we move back in when risk is low. But anyways, what's interesting to me, so I've been seeing clients all week long, and consumer sentiment, they're saying in the article, consumer sentiment is at the lowest level in a decade. I'm seeing it in my office every day. Because of what people are seeing, they're concerned, extremely concerned about the amount of government spending. And they wonder, when is the shoe going to drop? When is the shoe going to drop? And all of this comes to home to roost of all these trillions of dollars of money that we've created out of thin air to spend on all these programs.
Yeah, so the U.S. equity rally slowed Friday after the data it's the University of Michigan has this preliminary sentiment index. It fell by 11 points to 70.2, the lowest since December of 2011. It's just amazing how people are feeling. Like the one article I had was talking about how the inventories are at the lowest they've been in years, consumer inventories, just because we're short on so many different supplies.
Supply chain lag.
Yes, and I was in Kroger this past week, and the shelves were just bare places.
I was in there yesterday, and I can't remember what shelf I was on. I think I was in the water aisle. Yeah, I was in the water aisle getting a gallon of distilled water, and the whole thing there was only 2 bottles left, and the whole thing was wiped out.
And I was looking for different things. I had a party I was given, and I was picking up some snacks and things, and each place I went there was emptiness. I was trying to find some little snack candies and stuff, and candy was gone, the potato chips were gone, frozen goods were gone. It was just amazing. And I was at the dollar store this week, and the entire frozen section was empty.
Wow.
And so I don't know if they're changing their program over there or just they can't keep up with the demands of things. But so many places I've been, I went to the Dollar General to get some toilet paper and paper towel. Wasn't a single roll there.
What?
Yeah. But then I went to Publix and they were fully stocked. So no worries. I got my paper products.
It's really weird. But anyways, so COVID has driven a $24 trillion surge in global debt. So people are worried about it. Our debt to GDP, I had to look it up this morning. I've been up since 4.
Lots of time to research.
I wake up at 4 these days, and it's I'm so wide awake. It's so crazy. My head's spinning around a little bit. So anyways, so our national debt is $28 trillion right now. Our debt to GDP is 128%. So we're still behind. And Japan is the worst. They've been over 200% debt to GDP for years. But my clients are concerned about this. I mean, this is something that we've never done before, and it's not good. And you wonder how long can it keep going, and how long can they keep interest rates low? How long can they just keep everything going the way they want it and control it? And at what point do we reach a tipping point that inflation has to happen and prices have to go up, and then people get hit over the head?
Yeah. This other article is saying that data on Thursday showed the U.S. producer prices posted their largest annual increase in more than a decade last month, raising inflation concerns. And after Wednesday, the U.S. Consumer Price Index reading indicated the pace appeared to be slowing a little bit. But, I mean, like you said, inflation is still taking off. The prices are getting higher. The inventories are getting lower. Just kind of a perfect storm.
So if you're retired, you worry about this kind of stuff, especially if you're on a fixed income, and that makes sense. And so I met with a couple yesterday that are in that boat, and we had to really dig through what they're going to do going forward, because they are going to be on fixed incomes with limited, because of their health, limited ability to go out and do a whole bunch of work and earn much more money. And so we spent an hour and a half kind of grinding away on all the options that they had and came up with here's what we're going to do for now, and they're going to come back again. But it is a big problem. I mean, if you're on a fixed income and gas prices double, Rich, really, I'm shocked that they haven't by now. Hey, CT.
Hey, we got a call, CT.
He's snoring.
Good morning. You're on the air with Sherri and Becca.
Good morning.
Good morning.
I have been working on my life book somewhat.
Yay.
Awesome.
And I come across something that I don't quite remember when I took economics for engineers way back in college.
Mm-hmm.
It was, economics 3.14159.
A great class.
Yeah. I seem to remember that if you had a joint checking account where either of you or your wife could write a check out of that checking account,
Mm-hmm.
then the names had to be separated by an OR. O-R.
Yes, in order for either of you to write a check.
Okay. And also on the brokerage account, does it work the same way?
It should be, and I think our paperwork shows the name and the other name for a joint account. But either person can take money out of the account because they're both joint owners.
Yeah, I'm not sure. It depends on the financial institution with the whole and or thing. But in my experience of the places I've been, if there's two names on it and it's a joint account, unless it's some sort of business account that has like a dual signature requirement, if it's two owners, they both have equal rights and opportunities to that account, and they can clean it out. Either one of them could. But by choosing to be on that account with that person, you're trusting them and that they're not going to clean it out on you.
Right.
But you both can write checks on it equally, deposits and withdrawals.
Yep.
Okay. So if both names on the brokerage account, both names separated by an or an and, it doesn't seem to matter. Is that correct?
I'd have to look at the paperwork because I've never paid attention to that. I just know that the two names are listed as owners.
Well, I know.
Co-owners.
I mean, we've been doing this for years, writing checks out of that brokerage account and drawing money out and putting money in and so on and so forth.
Mm-hmm.
And nobody's ever questioned it.
Okay.
But, I don't want to, my heirs to get down there to probate and the judge says throw it all out because you've got an ampersand in there instead of an or.
No, whoever did the account, the brokerage account, would have done it appropriately. I mean, the paperwork, the regulations are so tough on all of this stuff that they would know and make sure that it was done properly. So if you predecease your spouse, then the account becomes hers. And how that works is we have to open a separate account and then we have to transfer it to an account specifically in her name. She can't just take over the account. That is the pain of this business, is the paperwork, that you can't just remove a name and leave her name on it. It's got to be redone and the money transferred and all of that, and then she renames beneficiaries. And I'm big on it. This is a really good point that you're making here. I'm really big on beneficiaries on every account. You can go to the bank and add a pay on death form to add beneficiaries to bank accounts. You can add transfer on death to add beneficiaries to individual accounts or even joint accounts. I did a joint account this week, and we named the children as beneficiaries in case the couple who's married, who's going to own the account, if they both died in a car wreck, the three kids each get a third. I want it all set up to be easy, smooth and easy. And when everything can transfer to the right people, it's a big deal.
Okay. Well, I guess I want to transfer it to just one person, my wife.
Okay.
Or, I mean, I don't think I'm even trying to transfer.
Not ready for that, huh?
Oh, no, I mean, she already is in it. It doesn't have to be transferred to her, does it? She's already on it. She already owns it.
Right. But if you passed away, then that would transfer to her only, and then she would name beneficiaries of her own.
Okay.
And it is something to look into because there's two different types of joint tenancy. Most of the time in Georgia, most people do joint tenancy with rights of survivorship, which automatically would go to your other spouse if one passes away. But with the joint common tenants in common, your half automatically goes to your beneficiary. So you want to make sure that that's titled right, because I found a couple old accounts that we had that were tenants in common, and that's normally used in
That's bizarre.
The community property states is where they normally see that, but somehow it got some of our accounts.
Or in residential property, you see it because you have two people with their own heirs, and so they're buying a house, tenants in common, because each of their half is going to go to their children, which is another disaster.
Or if you buy it with a sibling or a mother and a son or something like that, then sometimes you want it to go that way. But most of the time with spouses, you do it with joint tenancy with rights of survivorship. So it's something to check into, and we'd be happy to look over things with you.
Yeah,
anybody that has
absolutely.
questions about that, and we can do the research if we don't have all the answers. As I made a note to check out the and or the or. And again, I'd said at the beginning, some institutions are different. I worked for a bank that had very strict policies about things, and they probably were very strict about the and or the or. And I know business accounts definitely made a bigger difference with that. But come and see us. Give us a call, 478-922-8100. We'd be happy to set up an appointment with you and go over any of the titling issues, beneficiaries, any of that.
So look at the can of worms you opened up.
No, I don't want everything to hang on a two-letter word,
Right?
Absolutely.
Do you want to text Becca with your phone number and have her call you back with an answer?
Yeah, that'd be great.
Okay, it's 478-955-8284.
955 884
8284.
And this is your business phone?
Her cell phone.
My cell phone.
So you can harass her day and night.
Okay, so when should I call?
If you want, you can just text me and send me your number, and I'll give you a call Monday once I get in the office and get it researched for you.
Okay.
Yay.
Okay.
Good. Excellent.
Have a great weekend. Look forward to speaking with you soon.
All righty.
All right.
Good question. I'd never thought about it. I've never looked at the paperwork like that. That's a good question. What were we talking about?
We just finished up about the cruise ship retirement center.
This is This is the problem when you wake up at 4 o'clock in the morning.
Why don't you talk about the PD?
Yeah. So we had I had 2 clients this week. I have 3 clients that have Parkinson's disease, and I'm meeting with Steve's clients with him. And he had a woman come in this week who has Parkinson's disease, and we started I was asking her about her health and medications and how she feels, and she's got double vision, so she can't see the statements, she can't read, which is already miserable. Well, then she starts telling us about the hallucinations and delusions that she's having, and she sees people in her house that aren't there. She sees things in her yard that aren't there. She has a knock at the door, and she doesn't know if somebody's at the door or if she's just hallucinating. She said there was a knock on the door one night at 9:30, so she went to the door and looked through the peephole, and it was a UPS man with a package, and it was real. It was real.
At 9:30, you'd be like, wait, that's really not real.
Yeah, that seems very odd. But she has things in her garage. She hears things in her attic. She sees things in her bed. The more we talked, the more stressed out I got, because I've never even heard of this before. And I had a client in yesterday that used to be a pharmacy tech, and I was talking to her about it because she was in the pharmacy business forever. And she said, yeah, she goes, I've seen ads on TV for medication for that, to help fix that. Huh. It's that. And so then I go and read and do some research on it, and it says 55% of people with Parkinson's disease have this psychosis. 55%, but they don't talk about it because they're embarrassed about it. And so if we hadn't really gotten into how's she doing, if we had just talked about the market and her portfolio, I don't think she would have brought it up. And so I've got to call into her son because he has offered to have her come stay. I don't think she should be alone. And so if you have someone in your world with Parkinson's, you need to bring this up and have a conversation. And if they're not dealing with it, they need to talk to their doctor about it and let the doctor know, because there might be something they could do to help. But if nobody knows about it, nobody's doing anything about it, and then it's just this frightening thing that you're living through that I can't even imagine. So the hallucinations involve visual hallucinations, so seeing things that aren't there, such as people living. Oh, she saw her dead husband.
Oh,
that
wow.
was horrible. Animals or object, hearing things that others don't, like voices or music, smelling things that aren't there, feeling something that isn't there, like something touching or moving on your skin, tasting something that isn't there, like an unusual taste in your mouth, and then delusions can be conspiracy thinking you're room is bugged or your telephones are being wiretapped, or believing that someone's having an affair on you, or walking into a room with people laughing and assuming they're laughing at you. This is really serious to me. I didn't even know this existed.
So my great-grandma, I would have been in grade school, so many, many years ago, but my great-grandma had Parkinson's, and I remember her hands always shaking, and as a little girl in elementary school, that's just kind of what you remember about it. But she would tell certain family members, and I don't think she told everybody because, again, you know that it's not quite right, but she would tell people that there was people in the corner of the house, or that when everybody else was gone, people would come by and there was a man in her bedroom. She'd talk about all the cobwebs up in the corner, and, I didn't process it all as a little girl, but that's exactly what she was going through. And then when I was reading this article about smelling and feeling and tasting, that would be it's one thing when your mind causes you to see things or think things, but to actually smell things, that could be really dangerous, in different cases.
It really could be dangerous because you think something is real and it's not.
You think something's on fire, or, you just never know.
Yeah. Anyway, so reach out to people that check on them and make sure they're doing okay. And if they're not doing okay, encourage them to get some help, because that's just that really scared me for her. I'm very concerned about her. I'm going to talk to her. She has 2 sons that love her very much, and they've invited her to live with them, and so I've reached out to them to have a conversation about that.
Check on your loved ones.
Yeah, period. Good.
So last week we had a couple of questions, and one of our hottest topics, so I got all my texts about and emails, was about the federal long-term care insurance.
This is huge.
So I just wanted to go over it again. We had a lot of questions about it, and I sent some information to several people about it. But the federal long-term care insurance program is for federal employees, U.S. postal workers, and military members. And for the military employees or enrollees, it also includes active duty and retired. So we had several questions about retired service members, and it does include you.
People don't know about this at all.
No, and
I don't
everybody
understand
was shocked.
This.
But I guess the base is really bad, in my opinion, about getting out all the details about enrollment. It takes 6 months to get started out there, and you finally get drug on, and then there's no real good enrollment process that you go through to explain all the different benefits. There's like a 1 or 2 day onboarding program if you've never been on base before, and they bring in different people for like a half an hour to an hour and talk about the different things that are going on base and different situations, and someone probably covers this in that 2 days of ongoing people. But in order to be eligible, you just have to be eligible for the type of insurance program that's called the Federal Employees Group Life Insurance, or FIGLI. So in order to apply for the federal long-term care insurance. So you don't necessarily have to have the group insurance, the group life insurance. You just have to be able to qualify for it. And it's also for qualified relatives. And we found, how we found out about this was one of Sherri's clients, her parents had gotten the coverage because of their affiliation with the base. And so it's an awesome opportunity. I wrote an article this week about long-term care, and I think it said once you hit 65, there's a 50 to 70% chance you're going to need long-term care. And I think we've talked about averages up to 8,000, 8,300 now is about the average for long-term care. And it's about, I think, 28 months that you, on average, will spend in a facility or need long-term care if it's at home or in a facility. So that's almost $250,000.
Where if you have Alzheimer's, the average lifespan is 12 years.
Gosh.
Average.
Do you imagine $8,300 a month for 12 years?
No. I mean, just...
So this is huge. If you'd like the article or more information, email me, Becca, BECCA, at rfmoney.com, or text me, and I can send you this article, but it talks about all the relatives, qualifying, surviving spouses, anyone who's separated may be eligible to receive a deferred annuity, any retired or separated military member, retired members of the reserve, gray reservists who are separated and not yet drawing an annuity, current spouses of employees or annuitants, adult children 18 or older living employees, parents, step-parents, in-laws of living employees and their spouses, and there's even, in some cases, your domestic partners. So almost everybody that you know in your life could be included for this insurance.
So John Hancock is the underwriter for this policy, and because they have a giant risk pool, it is the lowest priced policy that I have seen anywhere. I cannot beat it. I used to write long-term care insurance, and I haven't written a policy for years because I haven't had anybody qualify, and it's gotten so expensive. In fact, the last quotes that I did were for policies that were combined with annuities or life insurance because it's easier to get in. And you could do a lump sum. Like let's say you take $75,000 and you buy a long-term care / life insurance policy the life insurance is double the amount that you put in immediately, but then the long-term care is a factor of the amount that you put in. And the last policy that I looked at, the premium was, the benefit was just not very cost effective. And so if you want any quotes, if you want to do a comparison, just email me, Sherri, Sherri, at rfmoney.com, and I can go to the underwriter that I use, and I can look at all the products that are available. That if you're capable of getting on this product, you're better off than most.
We got a call. We'll take a break from that and come back to it. Good morning. You're on the air with Sherri and Becca.
Good morning.
Good morning.
I'd like to make a comment to the previous caller, and can you hear me okay?
Yes, you can. We can.
Okay, I was getting a little static on my end. My wife passed away not too long ago, and I'd like to comment on the checking accounts.
Mm-hmm.
First of all, we had a joint checking account that we've had since 1969.
Wow.
And, of course, it had changed banks. It went from one to another, and finally ended up with the bank I have today. So when she passed away, what I had to do was just go down with a death certificate, and they removed her name from the account, the joint account,
mm-hmm.
and I added my daughter. But I had to have new signature cards. But the account number and the account did not change with two banks here. One's a national bank, one's local.
So banks are really good about that. Like you said, if you have the death certificate and then if you add a new person and have new signature cards and they come in with you and sign, but investment accounts are different and it's a lot more paperwork.
Yeah.
But yeah, I was going to mention that. With the bank accounts, it's a lot easier.
Because he had a bunch of investment accounts that he had to move. That was a lot of work. Yeah.
Well, I was just going to say that if the gentleman has a joint account, that's probably what would happen to him, that he wouldn't have to worry about his wife, that what she has to do is just go to the bank and with the death certificate, and I assume she would keep the same account number, etc., and just have to remove his name from the account and add someone else if she wants to. And it was really not a problem. The only thing I would suggest, though, is don't go down quickly after the death, because in my case, what happened, I went down very quickly trying to be diligent about doing this, and then what had happened is the Social Security check came in after I did that, so it bounced back to Social Security. So then I had to go back to Social Security, and they had to reissue the check. So I wouldn't be in a great hurry to go down there, but do it a couple of months at least after the death. The second checking account I had was actually a trust checking account for her. She was the trustee of the checking account and the trust. So when she passed away, it was a completely different ball game. We had to get a complete new account number, new checks, etc. I was on the account of the trust as the trustee now, and then I did not keep the same account number. So with the trust, it was also a little bit different on how they handled the checking account and when the trustee died.
Did you have to get new paperwork done for the trust to change the trustee?
No, because I was on there as the trustee, so I didn't have to do anything. Okay. They just got the copy. I'm just saying for the trust. But they wanted to know that I was the trustee. I had to send that in for them to look at the bank so that they would change the trust account so that I would be the trustee. Okay,
yeah. Every little bit, one has a different kind of route you have to go with getting it approved and changed around.
Yeah, so if, once again, that's going to be a little bit different. And the third thing I had with beneficiaries, if you will, was a real odd thing. It's the thing that I left till last. It was my deed or title to the house.
Okay.
Never thought about it. Both our names were on it. And so I called up and I said, what do I have to do to have my wife move from I don't know if it's really called the deed or the title. I'm not sure which one it was, but let's just say deed. She said, well, I hate to tell you this, but you're only half owner of the house. And I said, what? I said, we're both on the deed and everything. And she says, well, that's true, but you did not have on that joint rights of survivorship.
Right. You were tenants in common.
And so what happened is then I had to go through, that was the only thing, I had to go through probate court, $750 later. The judge asked me 2 questions, and then I had to get a new deed. Yeah. Because the attorney had left that off when he did the deed. He didn't put those 4 letters on there, the joint rights of survivorship, if he'd have done that, I wouldn't have had to have done anything.
Right.
Yeah,
So,
it's amazing what those little letters can mean, and just how, if the wrong person, or the person just doesn't do quite the full job, or they don't pay attention.
Well, the message is go pull your deed out and look at it right now, people.
That's what I was going to suggest.
Go look at it. Get the safe out.
Especially if it was early 2000, because the clerk at the court had mentioned, she said, well, I don't know what happened during that time period, but it seemed like a lot of people left that off.
That's weird.
And I don't know if it was just change of people or what.
It reminds me of when I was in insurance training for insurance sales eons ago, and I sat through this life insurance training, and the guy that was teaching us about how to write life insurance and how to choose an amount for somebody and how to guide people, he said, when you get to the beneficiary part, because we were doing it all on laptops with electronic signatures, he goes, when you get to the beneficiary, don't even ask him who the beneficiary is, because that's a waste of time. Just type in estate.
Yeah.
Which is a disaster.
Yeah.
Exactly. Probably one of those things where they just got lazy and they didn't have the regulations holding them accountable back then. Is probably,
Yeah.
Same
well,
thing.
it was funny. I asked the attorney, can I sue the first attorney for not doing that? And they said, well, you can sue anybody, but I doubt if you're going to get anywhere if you do it. But I was just so upset about it because this was an older attorney, well established and all. And I remembered on my house I bought in 1978 in Warner Robins, when I sold it. Of course, my wife didn't pass away, but I don't remember ever having a problem with the deed on that. But I suggest you look at it now before one of you pass away or one of the spouses pass away. It will save you a lot of grief on other paperwork to have to go through probate court just for that. Otherwise, it would still be, you'd have 100% of the house instead of 50%.
And while people are looking at stuff, look at your beneficiaries. I preach this all day long. And I'm meeting with all of Steve's clients because he's retiring, and on almost every case, we print out the beneficiaries. In almost every case, there is something they change. Yeah. Almost every person. It has been, and we did beneficiary reviews years ago. We did with every client. And so stuff happens and people pass away and they don't tell us about it.
People
and they're still
get divorced.
Listed. Yes, get divorced, have children become of age. Marry, remarry. All of those things. So look at your beneficiaries and make sure they're actually what you really want them to be, because you're the only person that can control that.
Well, and listen to this gentleman's story about, the probate. I had a guy that we were looking at his beneficiaries, and it was him and his wife each had an IRA, and they had each other listed as the primary, and they had the estate listed as contingent. And I said, well, who would you actually want to get that? And he's like, well, my kids will get it 50-50. I said, well, we can list them. Well, it'll just go through the estate. I said, but if you list the kids, it'll be a lot easier. And he still didn't change at that point, but, it'd be a lot easier for him, wouldn't it? We should give him your example.
Yeah.
I would say one last thing. I'm retired military, and as you talk about the government and things, about them explaining benefits, I had the same thing with military insurance. And when you talk about your status changing, a lot of times they encourage you to say by law, which would be fine. Mm-hmm. But some of the people wanted to, for example, put their wife specifically on the military insurance.
You're talking about life insurance?
Yes, the life SGLI.
Okay.
And so the person gets killed, but he had remarried. He divorced, but never changed the first wife off and put the new wife. So when we had to file the paperwork to get the beneficiary, get her the insurance money, it went to the ex-wife, not the
Happens all the time. Wife. Happens all the time.
Right. So when you remarry and things like that, you really do have to pay attention to beneficiaries. Otherwise, well, maybe the guy wanted the ex to get it. Can't say.
Maybe he liked her a lot.
No, I've never seen that. I've just seen it be a nightmare, and it's just a disaster. And the thing is, what's crazy is I've seen a lot of young people that get the will made. They remarry and they go have a new will made, but they think the will overrides the beneficiaries. And if their will is correct, everything else is going to flow the way it's supposed to. And it's like money flows where it's going to go to whoever's listed. Young people don't understand this. I've seen it a ton.
Well, that's the problem, as you were saying. A lot of these individuals are, for ease, that they don't really explain what your options are and what they mean.
Or they're covering so much information you can't absorb it all. It's just like bouncing off your head after 4 hours.
Well, you guys have a good weekend.
Thank you.
Enjoy the show, and I'll talk again with you later.
Thank you. Take care.
So that's a good reason to have a financial advisor come visit us and somebody that, you develop a relationship with and that you come and see, once or twice a year. And we go through all these things over time, and we get to know you. We know when you have life changes, if you have someone that passes away in your life, or you get remarried, or, in this case, this gentleman's kids were underage at the time when he started this IRA, but now they're older, and so it would be a good time to list them as the contingent beneficiaries. And so come and see us, 478-922-8100. We do complimentary consultations. We probably did quite a few complimentary consultations this week.
Right.
Just meeting with wonderful people and talking through problems. We will help you with any type of financial situation. I met with a young lady this week, and we talked about debt, just trying to get her on a program to get her out of debt so she can start saving more. And we're willing to help you with anything. Come and see us. Give us a call.
Yeah.
Email us.
We meet a lot of nice people. Very excellent. What do you want to talk about next?
Well, let me finish up one last thing on this long-term care. Just that it has such great benefits. You can get inflation protection. You can get paid up. You can have you can increase your coverage at any time. And there's even there's a lifetime benefit that you can choose where there's no maximum lifetime coverage cap. And that's huge because a lot of times when you get a plan that's a 2-year or 3-year plan, there's a set benefit for a month, like a $5,000 a month, and it's 2 years, so there's a set cap. But this insurance, like Sherri said, is just amazing. So look into it. Check it out. If you have anybody in the military or on base, in federal employees that you might be able to get coverage through, or if you work on base or military, think about all your family members that might benefit from it.
Right. Yeah, I'm amazed at this. I'm amazed that I never heard about this. And Randy was in the military for 31 years. Never brought anything home about this.
Isn't that crazy?
I wrote our own policy. It's a paid-up policy that I did years ago. I'm a believer in it. Steve Rosenberg bought a policy, too, the same time I did, and we're thankful that we did. I did a 10-pay, and I don't know if any company offers this anymore, but my business paid the premium for 10 years, and it's paid up lifetime unlimited benefits. They are on the hook big with us. They should have never written that policy. Anywho.
One other thing that came up last week with the capital gains, we were talking about that. And I just kind of wanted to finish. There are different ways to avoid paying capital gains by finding different ways to reinvest the money, matching losses if you take a loss maybe on a stock in your portfolio, moving money into IRAs and such. But, the biggest thing is before you get into any investment, really think through the end result of it. The gentleman that talked to me about it was like, now I'm going to have, several $100,000 in gains from this, project that I've been working on. It's, a business and it's buildings and now I don't want to have to pay all these capital gains. But before you go into that, that's one of the costs of doing business. You should think about that if you're going to invest all this money.
So he's getting ready to sell it or something?
Yeah, he's getting ready to sell it. Now he doesn't want to pay capital gains.
Okay.
Oh, we have another call. Good morning.
Good morning.
Good morning, ladies. How are you?
We're
Good.
Fantastic. How are you?
Best day since yesterday. This is Pastor James. I got a quick
Awesome.
question for you.
Yeah.
I have a member whose mother passed away.
Mm-hmm.
It's just her and her sister. And she went down with the death certificate to close the bank account, which we don't know how much is in there, which I'm probably thinking it's not a whole lot. But according to the attorney, there's about $3,000 to try to go through the probate and all that stuff. And then the gentleman before me said like $750. Is there a way to be able to close that account and retrieve those funds without having to? Because she may go in debt, doing that. Might be $20 in there. Who knows?
So what's your experience with this as a banker? Do you have any comment?
So normally with a bank account, so it was the mother was on the bank account and now her two daughters are trying to take care of it?
Yes.
And they're co-executors?
After she passed, yeah.
So
There's no paperwork to schedule them as executors.
There's no will.
No.
okay, yeah. If no one else is on the account
That's
with
the
her,
problem.
and then there's no named executor, they're going to have to go through the courts and get appointed as, get the letters of testamentary and get appointed as an administrator or an executor.
Mm-hmm. Which costs less than $200.
But yeah, it just finding somebody that could help them if they go to the courthouse and ask for the paperwork to be made the executor. They shouldn't have to pay an attorney $3,000.
No.
And especially like you said, the bank account has $20 in it. It may not, definitely not going to be worth it. But they should be able to go to the courthouse and get the paperwork. And then once they get named the executor, or the administrator, they should be able to take that paperwork to the bank and get with the death certificate and get the money out of the account.
That should be a piece of cake. Is there any other property or anything else that needs to be transferred out of that person's name?
No, ma'am.
Okay.
Everything was there. I told him to go look for bank statements and see maybe if you can find a bank statement or figure out if it's worth doing or not.
Yeah, if there's only $20, they may not even mess with it.
Right.
Yeah, for real.
Right.
But if once they get appointed as administrator, then they should be able to do all of that. And the bank's not going to ask for a will, like who the money goes to. They're just going to trust that the administrator will do what they need to do with it.
So how are you doing anyways? You doing okay?
I am doing great. I'm staying busy and keeping running.
Yay. Busy is good. And weddings are back on, so you're probably busy with that, right?
Yeah, headed to Roswell today, matter of fact.
Awesome. If you need an officiant, here's your guy. You're going to get married.
Thank you for that plug.
And that's always a lot more enjoyable to do weddings than other.
Right.
Oh, yeah.
Right?
Weddings over funerals any day.
Yeah. Awesome. You take care.
Thanks
have a great
so much.
day.
You guys have a wonderful week.
Yeah,
Thank
you too. He's such a nice guy. Fun guy. Yeah, we had dinner with him one night, and there were people that walked by. We were at Barefoot Tavern brainstorming on some things he wanted to create in his ministry. And this guy comes walking in and stopped at our table and was like, oh, my gosh, Reverend Ham. He did his wedding. He was officiant for his wedding and said he was the most fun guy ever. Like, it was fun. It wasn't just this dry ceremony. It was like a blast.
Oh, how wonderful.
We need more of that.
We're going to get him all sorts of part-time jobs. He's on a side gig, a whole wedding program.
No, that's what he does. That's his main thing.
Oh, okay.
He's an officiant, yeah. That's his main, well, he's got other stuff he does, but that's the big thing. Let me see here. So I had a question this week about Medicare enrollment. I have a client. His wife is going to keep working. He's going to retire. And he asked me, can I avoid signing up for Medicare because my wife is still working and I'm on her health insurance? I said, I have to go look this one up because I don't want to trust my brain cells here. And so here's the question in the article from AARP. It says, I'm nearly 65 and retired, but I have excellent health coverage under my wife's employer plan. We hope to use this until she retires in 10 years. But if I don't enroll in Medicare now, will I be penalized when I sign up after her retirement? Answer is no. As long as you follow Medicare's rules, almost anybody who is retired but has group health insurance from an employer of a spouse or your own employer who is still working does not need to sign up for Medicare Part B. So in this case, it's the spouse is working, and so he doesn't have to apply. But if he was working and covered in a company that had more than 20 employees, then he could avoid signing up as well. Let me see. Who's still working does not need to sign up for Medicare Part B on reaching 65. When your spouse retires or gets laid off or otherwise stops working for this employer, you will then be entitled to a special enrollment period to sign up. This period lasts for up to 8 months after employer coverage comes to an end. As long as you enroll in Part B during the time frame, you will not incur the penalty. So here's what you don't want. You need to make sure you understand these rules and follow them, because I have a client who did not sign up. He retired from the base. He had the base health insurance that he carried with him into retirement. He hit 65 and was retired. He and his wife both retired, did not sign up for Medicare because he didn't think he needed to because he had the base insurance and he thought that was enough. Well, the rules are if you don't sign up and you're supposed to, every year that you don't sign up, you incur a 10% penalty, which compounds on itself every year. So 5 years into it, at the age of 70, he starts having a bunch of health problems. And he thinks, wow, I should have signed up for Medicare. And he goes to sign up, 50% penalty, meaning that is on top of his premium he would already owe.
And you pay that every month. That penalty is built in your new premium.
And so that you've got to make sure you understand how this stuff works and you do it right, because you can't go back and undo it.
So call us, text us, email us for information about this. It's really big. My sister, she's still working, and her husband is way over 65. But he has been on her group coverage, and she asked about that. And she said, he's not on Medicare. And I said, well, he should be fine, but let me do some checking, just like you said. And something I found interesting in this article, that when you do turn 65, you can still enroll in Part A, the hospital insurance.
They want you to.
Which is the free portion. Usually that's free, Part A, which is just the hospital care. And you could go ahead and enroll in that, and that way Medicare kind of puts you on their map, and they know that you're have other coverage, but you still are getting, like, in the system. But the Part B is the one that you pay for, and that's the one that's the doctor's coverages, the doctor's visits, and outpatient services. But there's special little Around your 65th birthday, there's a 7-month period, like before and after, like a total of 7 months, that's considered your Medicare coverage enrollment period. And then, like she read, there's after your spouses would leave their employer, that's an 8-month period, and then 6 months after they leave, there's another period for Medigap insurance. So, kind of confusing, but there is some really good opportunities for that. But like Sherri said, I had a client that they were told some wrong information, and they never did get the husband on Medicare, and they have had tons of health bills, and it's just been a really big nightmare for them. So make sure you get this coverage. You've been paying into it all your life, probably. So you want to make sure that you get your Medicare coverage. Just have to follow their rules.
And regarding the drug plan, Medicare Part D, which is your prescription drug coverage, the rules are different. As long as you continue to receive creditable drug coverage under the employer plan, that you retired from and carried into retirement, whether your spouse is still working or retired, you do not need to sign up for a Part D plan. So this is more complicated than I think people realize. And if you want this article, just shoot Becca an email, and we will forward it to you.
And there's also cases where the employer, say, take my sister, for example, her employer might actually require her husband to get Medicare coverage. And it has to do with how many workers you have. Mm-hmm. I think some of the companies that have smaller than 20 employees, they can require the spouses to get on Medicare. So they drop them off of their policy and save them money.
Yep.
But if they're required in that case, they can drop them off of the employer benefit, and then that also would give them that only the 8 months to get signed up. So, like she said, there's a lot of rules around it. Give us a call, shoot us an email or a text, and we'll send you the article.
So we're covering a lot of financial stuff. I'm going to take a little break and give your head a little mini vacation. So we went to a conference a week or so ago in California. It was excellent, and we had one keynote speaker. And he was really good, and he was about how people get into mental ruts and how people are always attracted to the same information, the same news feed, the same TV channel, the same radio station, and you get so caught up in this rut that you think that's the only thing that's going on in the world. And I meet a lot of people that are there. It's easy for this to happen. Randy and I are in kind of a rut of detective novels, and we've been in this rut it's not really a rut. We really enjoy them. But we're getting to a point where we're having to branch off and read different stuff to stimulate our brains a little bit more. So we all have a bunch of books going on at the same time that we read at night. But what the speaker said, he said, go to Barnes & Noble and just walk around the magazines. And walk around and pick up magazines that you've never looked at before and expose your brain to ideas and thoughts that you don't have in your head, like a National Geographic or Bloomberg or The Economist, which is one of my favorites. Things that are going to show you and teach you and help you learn. I don't care if it's a cooking magazine or a home whatever magazine or woodworking or about pets or, just something different that is out of the norm of what you feed your brain every day. And it's just a really good idea. And you don't even have to buy anything. You could just wander around and look at books for a couple hours in the air conditioning.
Or they could go to the library.
Yep, well, you could do the library too. But you need to expose your mind to different stuff so that you're not just in a mental rut, because this COVID has had a massive, horrible impact on people that have been on lockdown. They haven't seen family. They're not going out. They're not eating out. They're barely grocery shopping. Still, I'm seeing a lot of people that they've eaten out once since COVID.
Yeah, like you said, we see a lot of clients that are in their own little worlds, and just like you quoted a little bit ago, 42 hours a week.
On television.
A lot of these people are watching Fox or just CNN or, and like you said, so everything they're learning about is one-sided in a sense, and it's all about the news and what the media wants them to hear. And so, yeah, take a little tour, go out to Barnes & Noble or, one of the other bookstores.
Gottwald's bookstores, great.
Yeah, find
just somewhere. Just wander around and just look at different stuff and see if you can't find something that you can use to stimulate your brain a little bit differently than what you've been looking at. I think it was a really good idea.
And maybe they'll find a new hobby, because we have a lot of clients, too, that struggle with hobbies and finding things to do once they're in retirement.
Right. And I've got people that have gone back to work. They had hobbies, they got bored, and they've gone back to work, and now they're happier working full-time, and they're 70 years old. And they love it. They love their jobs. And that's the key, is to find something you really want to do. But there are a lot of jobs open right now, a lot of opportunities. If you're bored and you're in a rut, maybe that's the solution. Some people have gone to part-time work. Some people, their employer lets them just cut back their hours or like phase out retirement over a 5-year period. And then I have people who their boss begs them to come back full-time every year because of their area of expertise and their brain and how much they know. They're like a brain trust, and they don't want them to go away yet. So it's just interesting how everybody has a different experience in retirement. But I've already started really thinking about my own life and what I want to do when I'm in my 70s, and I've got some plans that I'm starting to lay out that I'm excited about. Anyways.
On the radio yesterday, I heard them talking about the oldest, workers, and this lady was 97, and she finally retired from nursing. She'd been a nurse for over 70 years, and they were talking about the changes she must have seen over 70 years in nursing in her experiences.
Oh, my gosh.
And that it's amazing she's able to keep up, but it's just something that she loved, and she loved serving people. And so, there's no age limit. You don't have to retire at 65, and just because it seems like you should, if you don't have anything else better to do, you might as well keep making money and do something you enjoy.
Yeah, I knew a hospice nurse. She retired at 90.
Goodness.
Yeah, but she just loved it. She was so passionate about what she was doing. But, I mean, 90. Can you believe that? 90.
No.
And she was
I
so
think
spunky.
we'll be done by then.
She was this tiny, spunky person. I mean, she had so much energy. It just always blew my mind. I don't know how that works. Anywho. So let's talk about this spousal dependent and survivor Social Security stuff.
Yes.
We get these questions a lot, and I sometimes have to stop and go to the internet and look it up because you get so much stuff in your head after a while that it's like the new stuff pushes out the old stuff. So, question is, I'm turning 62 this year, and I'm considering claiming my retirement benefits early since I was just denied disability. If I do, will this lower my wife's benefits too? This is a great question.
Yeah, I had actually someone text me Saturday.
This question?
Yes, this question.
Wow.
So she wanted to know if her husband took his early, would it affect her benefits?
So it says, as you know, claiming Social Security before your full retirement age, which is currently 66, and everybody's different. You can go online, ssa.gov, and look up your full retirement age. That lowers your benefits permanently if you do that. To answer your question, if you claim your Social Security retirement benefits early, this will not affect your wife's benefits, dependents benefits, which are also called spousal benefits. As long as your wife waits until her full retirement age to claim her spousal benefits, she collects her benefits off of your earnings record, even though you retired early and took reduced benefits. That's a good question.
Yeah, absolutely, because he could take his early, but hers is based on his full age retirement benefit, and so even if he started taking early, she could still take it. But if she takes early, if she started taking at 62 or 63, then she would get reductions in the benefit. And you get spousal benefits if yours is less than half of what your spouse's benefit is.
And try to do everything with them online because they still aren't going to work. I had a young client in this week. Her husband died, and so she's now responsible for 3 kids in the house and the whole 9 by herself, and she's just going through a rough patch. Well, she went online to apply for Social Security benefits because she's eligible as a widow, and she has 3 dependents, and 2 of them are eligible for benefits. And they responded back to her. They scheduled a time and said, you need to block a 3-hour window.
Oh, that's horrible.
Horrible. 3-hour window to talk to them so she can apply for benefits. Why is this so hard?
Why can't they just make an appointment?
Why can't they
and stick
go
to
to work? Why can't they show up at their office by now? This is outrageous. Department of Labor, all of them are working from home and not doing a great job. But anyways.
But yeah, and there's different benefits if you actually have a qualifying child, so a child who's under the age of 16 who receives Social Security disability benefits, or you have children at home under the age, I think it's 16, then you would be able to give benefits as a caregiver. So there's different rules for it, and we're not experts on it, but we definitely can research and get you pointed in the right direction. So if you have questions, you want us to look into this with you, email us, Becca@rfmoney.com, or schedule an appointment with us. We'd be happy to go over this with you, and not only as a reactionary type if you're already in a situation, but we would be happy to help you plan for it. Because just like the lady that asked me, she's like, should I go ahead and take it at 62 or should I wait? Well, in this case, she's going to get a bigger benefit if she waits. So then, like I told her, there's a lot of things that go into that, and she should come in and visit us because, what are your other streams of income coming in? Because she said her husband's probably going to work till 70, so that means he's got that income coming in, and so maybe they don't need her income until she's a full age retirement. So.
In a case that I had years ago, I had a spouse who lost his wife, and he came to me, and we led on his retirement plan. And he went ahead and took spousal benefits from his wife's record. And then at 70, he flipped over to his own higher benefits. and was because he cut his hours back so that his benefits would not be reduced, and he was working in a position where he was able to control how much he made by how many hours he worked, and so he could stay under that threshold, get her benefit, partial benefit, and then let his continue to grow over the years and then flip over to his. So there's all sorts of ways to look at this, and you have to look at everything from your debt to your other cash flow to accounts, investment accounts, distributions. All of that has to be taken into the picture of what is the best choice for you. So
come
yes.
see us. We'll help you look at this and help you dig into all this information. There's a lot out there.
And if you haven't yet, and you don't have a statement from Social Security, and you're curious about what your benefits look like, just go to ssa.gov and click on My Social Security and create a username and a password. Write it down somewhere so that you know where it is. And then go in there and you can look at your statement and you can see your benefits at 62, your full retirement age is 70, spousal benefits. It's all in the statement. It's great information. But anyways, I think we have about a minute left. Thanks so much for listening. You've been listening to Your Money on News Talk 940 WMAC. Text Becca. I'll just give your email. Email Becca if you have any questions about the show or if you want copies of any of these articles. BECCA@rfmoney.com. Office number is 922-8100, 478-922-8100 if you'd like to make an appointment. Or if you'd like us to come and speak to your group, we would sure love to do that.
Absolutely.
Have a great day.
Thank you.
The views expressed on the show should not be construed directly or indirectly as an offer to buy or sell any securities or services mentioned herein. Investing is subject to risk, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should only be relied upon when coordinated with individual professional advice. Securities are offered through Royal Alliance Associates Incorporated, member FINRA and SIPC. Advisory services are offered through Rosenberg Financial Group, a registered investor advisor not affiliated with Royal Alliance Associates Incorporated. Offices are located at 2517 Moody Road, Warner Robins, and 4875 Riverside Drive, Suite 201 in Macon. Phone numbers are 922-8100 and 741-4457.
Broadcasting from the Jeff Smith Ford Studios, this is WMAC Macon, a Cumulus station. This is News Talk 940.